Hello and welcome to the Weekend Investing Daily Bite of 3rd of February. So since we last met last time, the budget came through on Saturday. I think it was a phenomenal, booster for the markets, consumption boost. Some people are not happy with the budget, but I think with that kind of a budget, uh, if you're not happy, I don't know what will make you happy. I think we are in a, I'll spend a few minutes on this. We are in a zone where 98% of the country, the income tax is abolished practically. Um, there is a huge amount of unlocking of money in the hands of lower middle class that should convert into a lot of consumption boost. I think people are not realizing the potential of this additional liquidity in the system. The fact that India was able to follow the path of fiscal prudence, keep the fiscal deficit on track despite all these subsidies, etc. I think unless there is some, you know, unforeseen incident which happens on the new income tax bill that will come out in a week, I think it's looking very, very positive to me. Uh, Today's market, of course, was marred by global cues, global weakness, but even there, you can very well see the market has not taken a big dive at all. I think the markets today are telling you that there is undercurrent strength in the markets. Trump's tariff a roadblock for markets. That is the topic for the day. We'll discuss it in the second half of the session. Please do read the disclaimer and do subscribe to the channel if you haven't so far. Let's take a look at the market chart. So Nifty actually opening gap down, went further down, but recovering most of the day's loss, intraday loss, and closing very near the day's high at 23,361, losing 0.5% from the previous session. So I think this is a very good outcome of the very negative news that was there in the global markets this morning. And the resilience shown today, I think unless we break today's low, we will see that this gap of yesterday may be closed in the next couple of sessions. And unless there is India specific tariff news, I am looking at this market at least climbing to 24,200 very soon. That's my sort of, you can say, speculative guess. So 0.5% on Nifty, 1.37% on Nifty Junior. On the mid caps, you had a percent of cut. On the small caps, you had 1.74%, but I would still say not so bad. And Bank Nifty was absolutely, flattish, 0.6% down, um, still in the range of the previous move. In the advanced decline trends, you had 137 advances, so lower number of advances for sure. But this was coming on the back of almost 4 or 5 days of gains, so that also helped the markets quite a bit. What was hit today was some auto stocks, Bajaj Auto, Tata Motors in particular. You had Hindustan Levers, ITC in the FMCG pack that went down. ONGC, Coal India, BPCL were down in the energy space. State Bank and HDFC Bank, along with Kotak and Axis in the banking space. Bajaj Finance, Bajaj Finserv Twins were both up. Bharti was up. Mahindra, Maruti, Eicher, and Wipro were some of the other leaders in the Nifty 50. On the Nifty Next 50, there was certainly more damage. Siemens, ABB, Capital Goods, which were expecting greater capital allocation in the budget, were pushed down. Motherson pushed down 8.4%. Also because of this deglobalization fears, Motherson supplies to a lot of American truckers. Uh, Public sector enterprise stocks, PSBs, which were hoping for some budget stops, have been their hopes were dashed big time. HAL, IOC, uh, REC, PFC, IRFC, all those stocks were down. Tata Power, NHPC, energy stocks, JSW Energy, Adani stocks also down. Indigo down after a heady day yesterday. Divi's Lab, VBL, TVS Motors, JSPL, Chola Finance, and Bajaj Holding. These were the stocks that were making some gains. Within the sectors, you can see that IT sector performed the best at 0.7%, and defense losing the most at 5%. Defense because more allocation was expected to defense stocks, and that didn't come through. Uh, you can now see why defense stocks which became the flavor of the season in just last 6 months, 1 year. And so many ETFs and funds were launched just on defense focus, and they're now sitting in losses. And the next wave of the move in defense will have to be awaited for those investors to make money. So never, in my view, go into thematic funds unless you have a clear plan of entry and exit, because themes can go out of flavor and then you are stuck with them. Public sector enterprise stocks, energy stocks, central public sector enterprise, capital markets, oil and gas, MNCs, FMCG, infrastructure, metals, all these were down more than 1.5%. PSU banks, commodities also along with them. So there was no real gaining happening today except for some marginal IT stock gain. And in the last 1 week, of course, real estate has picked the most at 12.4%. And there was nothing really much to talk about in any sector today. Within the defense sectors, you can see the kind of damage that is done. Zen Technologies, Hindustan Aeronautics, BDL, Mazagon, uh, uh, Garden Reach Ship, Solar Industries, many stocks that have been doing well have been smashed today. Kochi Shipyard, DCX, and again, unless you are having a firm plan of exit, do not have any entry plan for any stock, sector, or index also. Always strategize before. It's like when you enter war, an army is going for war. Do you think they strategize before they enter the war zone, or after they enter the war zone, then they think about what should we do now? Please think about it. Markets are like getting into a war zone. So you need to be prepared. You need to have your scenarios built out. If this happens, this is what I'll do. If that happens, this is what I'll do. Only then you'll be able to have a perfect execution of your plan. Anyhow, coming back to Trump's tariff, I think very bold steps are being taken by the US president. Sometimes boldness can be foolish or smart. It depends upon the outcome. If you think that, you know, established supply chain lines, for instance, let's take Canada, and I'm no expert on this, this is just from what I read. They have tremendous linkage with the US in terms of supply chain, whether it is automobile manufacturing, whether it is even groceries, whether it is even supplying manpower to border areas. There is amount of interaction, trade that is happening between those two countries and Mexico also, of course. To just slap a 25% tariff on that country, either it is a threat which is like a bluff. So Trump is saying, agree to my terms, or I'll not take this back. So there's only 24, 48 hours for that kind of window. Or this is just foolishness in terms of just to achieve an aim of what you promised before the election. You're going to disrupt everything and then hope that things will come back in place. What happens to millions and billions of dollars of trade that is currently happening, currently in progress? Orders have been placed, material is shipping through. What happens to inflation on the American side when suddenly those products are now 25% more expensive because the supplier cannot absorb that kind of tariff? What happens to the pushback when that inflation comes in the US economy on the current government? So these are questions which will evaluate, and the outcome will come out over a period of few quarters. And maybe this kind of a hefty move will either shake up things to an extent where we're going towards a great extent of deglobalization, that let every country just manage themselves. Very critical elements of trade will happen with somebody else, and that too at a very high price. If that becomes the norm going forward for the next, let's say, 5 years, I think the world can be a very, very different place. I mean, we rely on so many things on other countries and they rely on us. And this kind of a complete, diktat cannot sustain a orderly world order, not in my view at least. So this is where we are. Big announcements are being made. Trump has already announced tariffs on Canada and Mexico, and on China. China is yet to respond. So while Mexico and Canada have said that, take it back or we'll also put a counter tariff on you. I don't know how much that will help, but China is sitting quiet. I think China is also in their holiday period. So depending upon Chinese reaction and the reaction uh, and reaction of the markets, I think that will really set the trend of how markets will go forward from here. I think today was a very good day for Indian markets in the sense of reaction to this current uh, tariff diktat. I think Indian markets have really been mature enough to just drop 0.5% today. Other markets have dropped quite a bit. Uh, so this is the current situation. The tariffs have been imposed on China, Mexico, and Canada. And 4th of February is when they start. According to Trump, the justification is that they were necessary to curb migration and fentanyl flow into the US. Retaliation is that, countermeasures. China plans to challenge the tariffs at WTO. But just look at where the dollar index is going. The dollar index has jumped from 107, where we were expecting this to break down. It has now gone to suddenly to 109.6, which is the highest level since 2022. So very, very meaningful strength in the dollar, which basically means all other currencies will go down versus the dollar, and dollar flow will, continue to increase towards the US, meaning foreign fund flow outflow from the India will probably continue. Spike in the dollar index has caused the Indian rupee to crack very, very hard today. 87.05 is the closing price on INR, and it's jumped almost 50 paisa. This kind of a jump, uh, you know, happens only once in a while. There was one jump here, and there's one jump here. It's a very perfect looking flagpole kind of a situation, which technically it looks like we are headed towards 90 on this front. FIIs are continuing to sell very hard. 92,000 crores sold in the last 1 month, although DIIs have almost managed to counter that with 91,000 crores of buying. Crude oil is also up 2.5% in these 2 days. There's potential supply disruptions caused by US tariffs, and that is also likely to. So India is getting hit, double whammy hit. Crude oil prices are rising, and the rupee is falling versus the USD. So we are getting hit on two counts right there. Oil on a longer term chart is also just at some support point. And if we start to raise from here towards the 3-digit mark, that can be a very bad headwind for the Indian market. Indian market so far, it's good that we have corrected in the last 4 months ahead of this turmoil. So a lot of the fluff, a lot of the, you can say, the froth has been taken out. So whoever is holding right now probably is not a panic seller anymore, and that is the good thing about it. So maybe a few percentage here or there, but it doesn't seem like a continuous fall happening from here going forward to me. So staying calm, not correlating whatever happens in the US to Indian markets, because last 4 months we were falling, US was still going up, right? So if that is the case, when we were falling, it may be the case that the US may fall for the next 6 months and we may not fall, even if we may not rise. So, being or having these kind of correlations in mind, that if US is dropping last night, then we must also drop 2%. If S&P futures are drop 2%, or if in the next 3 months US market is dropping, then we have to drop, may not happen a one-to-one. So try to have a proper path of your investing plan. Don't assume or guess things that may happen. Like a lot of people right now also, after this sort of jump up that we've had, are sitting with the confidence that we will be able to buy much lower. What if the market doesn't come down from today? What if we go to 24,500 and you've sold at below 23,000 expecting 21,000? So these kind of discretionary bets normally will not work over a longer period of time. Once in a while you may win, but most of the time the markets will win over you. So what do you think about this Trump tariff also? Do let me know in the comments. Just like you are hearing me, I also hear your viewpoint in the comments, and sometimes I do learn a lot of things from there. So do comment about your thought process. Other folks also on the YouTube channel will read your comments, and there can be a great discussion there. Thank you so much for watching. Do like and share this video, and do subscribe to the channel. Thanks. Bye.